what you can see here is that we are approaching now a level of what was support that could turn resistance. Be very careful as we approach this number because, again, we need to see buyers prove themselves. Anyways, let me come back to this thought in just a little bit more detail in just a moment, as we do have core PCE on the horizon. So we're coming in very hot to this number. I just want to remind you guys, don't go anywhere after core PCE. A lot of times people leave right after the numbers, which I never understand, because the real interesting parts of the stream are after we get numbers and we can actually look for trade setups. So stick around with me, and we're going to do that here together. We've got 15 seconds to go, guys. So let's go ahead and hit our breaking news on the screen. All right, guys. So we are coming in here now to core PCE. And let's see if we get any volatility. The S&P just shot up a little bit. Gold also making a move higher. Let's see, core PCE numbers coming out. The dollar down. That would perhaps suggest that there was some cooling in the inflationary department. Let's see, though, because it is a bit early to tell. Gold is shooting up, right? Making a move from, the 1867 up to 1872, 1873. That's meaningful. The S&P 500 continues its march higher back to that resistance point that I just mentioned to you. And let's see what we get for the numbers, guys. There it is, guys. We had core PCE as expected, as I was mentioning, probably some cooling. We had some cooling, 0.1% compared to the 0.2% month over month. Now, that may not seem like a lot, but any victory in the inflation department for the Fed perhaps suggests that there could be some relief on this dollar bullishness. So if you're somebody who's like, I want to see some dollar weakness come in, well, look to the numbers, because that's what the Fed is doing. And as long as that Fed is, appeased by perhaps some cooling inflation numbers, it could lead to some dollar weakness. However, this number doesn't seem to be really incredibly market moving. We do also have GDP numbers out of Canada. So we had month over month come out 0% compared to 0.1% expected. And so putting that into perspective, that is something, if you're a CAD trader, that could perhaps suggest a little bit of CAD weakness there. But the core PC number is going to be probably where I'm more fixated on. Again, it initially shot the dollar down, but it has recovered those losses pretty quick, just showing right now the resiliency of that US dollar. Frank, I've got to ask you some stuff here with the core PCE numbers. They weren't really that interesting, but gold is on the move up, the indices are up, and Ivan asked a question, and I think you're actually more interesting to hear from on this. Have the indices pulled or turned? They pulled back here from the lows. Are they, is the NASDAQ bullish from here? I mean, we have seasonally, I was just mentioning, I don't know if you caught that, seasonally, we're coming into the best part of the year, historically speaking, for stocks. Yeah. I know you took a bullish trade on the S&P 500. Are you still in it? Share us your thoughts, and what do you think?
Yeah, so I took a long trade on S&P yesterday.
Okay.
And that was after it had kind of bounced off that sort of support level, just right above the 200-day. But there's a previous top here if you scroll back some. So just like a couple of layers of support, I guess. It wasn't like a major one, but there's just a significant drop. It hit this support level. It showed it showed like rebound from the lows. So I bought on Thursday on that candle, but trailed to break even. It barely missed my stop because it came all the way back, but just barely missed it. So I'm happy that it didn't close me out, and I think I'm just gonna wait to trail until after the market opens, because I'm sure it's going to take some pretty big swings. But PCE came in lower than expected, right?
Yes, it was.
So I was looking at that this morning. I couldn't quite remember, but I know that seeing lower PCE numbers is really good. On top of that, we saw lower GDP. So I guess what we're seeing is somewhat of less stubborn inflation. It's complying with what the Fed wants. So I'm somewhat more bullish on the indices. I know the EDGEFINDER still has it as a sell or a bearish reading.
Mhm.
So, overall, the longer term trend is still to the downside if we were to look for the past month or so. But
Did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the EDGEFINDER with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
I'm feeling more bullish on the indices now, just because of that large sell-off we saw in the past couple weeks.
Yep.
So this could just be a short rebound from the lows just to recover and possibly set up for another short. But, I saw the yields falling yesterday, and inflation numbers are showing us that they've declined. So, I think all we need now is the jobs market to comply with higher interest rates, and then, we'll probably be in the green from there.
Yeah, Frank, I think that is an interesting case study that we could do currently. If we were to break it down, bull case, bear case on the stock market, the problem is that you have a really good case for both right now. Now, the challenge about markets is that as a macro trader, as a fundamentalist, there's always a bull and bear case, so it always gets a little bit tricky. But I feel like especially right now, you have a weakening consumer. That's pretty evident that that's continuing to be a problem. You have, the Fed is continuing to be a burden on the stock market. You have, not necessarily stellar earnings. I mean, Apple, for example, had like pretty weak earnings numbers. So you have some bear case stuff, and then you have the bull case. Sorry, last bear case, COT data was horrendous last week for the S&P. We saw a major move to the downside from speculators. In fact, I'll show that on my screen just to reiterate what I said earlier. If you guys want to take a look at COT with me here on the Smart Money Tracker here, we have the S&P 500. Just to reiterate, now this is a little bit old data at this point. We do get more data today, actually. We'll report on that later today. We did that last week. We might do it again. S&P 500, look at this. So we had a major sell-off last week. We get that data again today. COT data will come out at the end of today, so that might flip. So all in all, bear case, again, I just made clear, bull case, seasonality is in our favor coming into the Q4 era. Q4, we have tons of spending that goes on, which companies tend to really reap the rewards of, right? Christmas time, Thanksgiving here in the US. We also have Black Friday. We have a ton of online shopping that goes on, and it really acts to stimulate the economy. Historically speaking, Q4 is like the best months of the year for the stock market. You have that. You also have, as you mentioned, some figures. GDP showed some cooling. PCE here showed some cooling. And finally, one thing that I think will, for me, make or break my bull case, Frank, is next week we have jobs numbers, and then we have inflation figures coming as well. If those numbers give promise to bull case scenarios, followed with if COT starts to look bullish, it's not too ridiculous to think the EDGEFINDER could very quickly flip all the way from bearish to bullish in the span of a few weeks' time. So it'll be interesting to see if that does start to come true.
Yeah, no, I agree. I'm just trying to figure out, I guess, what would be the best approach to this. And so according to the Fed, they always talk about, or at least Powell always talks about, it's per data. So whatever they're looking at currently, like they're not holding secrets from us. They're just analyzing what's going to happen and what has happened. So I guess I would just say despite the higher NFP reports in the past weeks, despite the higher inflation levels we've seen in the past months, look at what's current. And I think that's what the market reacts to. So overall, we've seen higher inflation, higher jobs numbers, but that's not necessarily like a going to be impactful going forward. So I guess look at all of the inflation numbers as they come in, look at all the jobs numbers as they come in, and we know that the Fed is going to work from that most recent. So just because we've seen higher numbers in the past means that it reacted accordingly. So I would say look at what we saw today was PCE, we saw GDP, and they both moved in favor of the optimism of stocks and gold. So saw a big move to the downside on both, and now could be time for reversal here. So what the EDGEFINDER is doing right now is, it takes in all the data as it gets it to. So what we see is still strong bearish sentiment, and I think it's justified. But we'll probably see in the next couple of weeks if the numbers are showing, more leaning towards optimism in the indices, we'll probably see the score start to decrease, and seeing this -7, or I think today was a -9, seeing that go from that to like a weaker bearish signal is a big, I guess, reversal idea for the indices.
No, I think you're right. And I think it'll be really interesting to watch that score as we come into the next month. Right off the bat, we flip into, October, and seasonality kind of swings back in our favor. So that already ticks down a little bit of this bearishness that we're getting in at least one category. And as we watch the jobs numbers, inflation figures, it'll be really interesting to see. I generally agree. You mentioned that weekly chart level, the huge, longer term level that the dollar index seems to have been able to conquer, right? We've broken out of this. Now, granted, we are seeing a pretty good sized pullback here intra-week, but as you mentioned, a lot of fundamental factors that still look bullish. And my personal opinion is that this pullback on the dollar is likely to be met with more buyers who want to continue it. However, like you said, if it does start to break and we get some change in the wind, again, one thing that's really important with trading is being adaptable and just, kind of going with what is coming our way in terms of fundamentals and macro changes.
Exactly. So plus actually this month everything was actually in favor of the dollar. So I'm not really surprised when I see everything very strong. At least now I saw PCE a little bit lower, but I don't think that will affect the market much. I think the dollar is still going to continue being stronger. So maybe we'll see NFP next week. What will happen? Maybe things will change.
Yeah, no, exactly right. And we do have, of course, those jobs numbers, as I mentioned, being really important, because what is kind of at the core of, inflation is having a really tight labor market like we do have in the US. The reason that continues to contribute to inflation consistently and continues to keep the Fed probably on their hawkish tone is that if everybody has jobs and everybody is, getting raises and they have promotions going on and everyone has plenty of money to spend, they go out and they spend that money, and that continues to contribute to price increases, which is exactly what the Federal Reserve does not want. So what is kind of key for NFP next week, and we'll be, of course, back together to talk about it, is following, is that jobs number going to show any further signs of cooling? Because cooling in the labor market would probably trickle into inflation as well.
Yeah, but the thing is, that is going to be tricky. Remember, we're going towards December. So, and I think companies, they are actually hiring more and more. So that might be not good. We might see a very positive number towards December. So from now on until December, mostly, if you check previously, unemployment change, or let's say NFP, mostly the jobs that are mostly positive, and that can be bad actually for FOMC, so that they will be forced to increase. You see?
Yeah.
so they will be forced to increase the rates. Unfortunately, if maybe things will change, but I don't think they will change that much. Towards December, people, they buy more. As you said, the more they spend, the more inflation is going to go up, and they are forced to hire more again. So there is a cycle that you can't just run away, unfortunately. And I saw something, maybe, I don't know if you did check about that. I saw the shutdown of the government and stuff like that in your country.
Yeah, so
That can also, it's not really good, but I did not really check that much, but I think that is going to actually push the market to go sideways. I saw it last year. So even this month, I think maybe the latest date, it's 19 October to close the government, whatever. Maybe you know it better because it's happening in your country.
Yeah, so the government shutdown stuff is interesting. I do want to come right back to that and just mention in terms of jobs and hiring at this end of Q4, a lot of e-commerce and retail facing companies like Amazon do a tremendous amount of hiring during this time because the demand from consumers ramps up significantly. In fact, if you look at historical returns of the stock market, they tend to be pretty good during fourth quarter. That seasonality that works against us in September seems to be coming back full swing in Q4 over the last couple years. And I think in the last 3 years, Kenzo, we've had a really strong end of year rally from the stock market. So it will be interesting to see if we get that kind of coming back here, which I am paying close attention to as well. Amazon, like I mentioned, of course, huge mega e-commerce giant. They do a tremendous amount of hiring, and I believe that, I can't remember the number exactly, but I think it's 150,000 plus people being hired by Amazon alone to prepare for Black Friday, Christmas, all that good stuff. So wild.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.